What's up, everybody? Buyers had a notable bounce last week, but also a pretty notable rejection from a key level. So, have they done enough to get back on track, or is there more work to be done? My name is Lamont. I've been a full-time trader for 7 years now, part of the Chart Guys team for more than half of that. In this video, we will answer those questions and talk about how to handle the market going forward. So, let's get into it. Okay. So as we were talking about, the buyers did see a very notable bounce. So they held this key structure from October 9th to October 30th. We talked about that last week after this little drop and pop at the structure's point of control, affirming in its demand. So this structure's significance was affirmed here, and affirmed here on these days and this session. And so a very, very notable bounce all the way back up to test the all-time high supply. But they did pop and drop right at the low of the supply. So this supply continues to remain in play. And as long as the supply remains in play, well, then obviously these buyers are not picking up where they left off. They still have some work to do. So this bounce is very notable. There's space over 580.91. That's this low over here for a potential daily higher low to be set. And I think it's pretty notable that the bounce, so you pretty much retraced almost 100% of this move down, and roughly 50%, I believe, of this bounce as well has been retraced. And I think I personally care much more about whether or not we can find acceptance in this structure, right? Because this is really the last back test that the buyers failed to hold over. If the buyers had held over 598.16 last week, they would be positioned really well for a go at all-time highs, because then there's really just this all-time high supply left. So next week, really what we care about is 594.37. Again, that's the low of this structure. If these buyers can continue to hold over the low of this structure, then they're continuing to chip away at this supply left behind over here. If they can get back over 598.16, then they affirm this structure as demand. Affirming this structure as demand means there's really just the all-time high supply left in the way. So next week, what we really care about is going to be, can these buyers find acceptance over 598.16, or will sellers find acceptance back under 594.37? If under 594.37, then that puts this structure right back on the table. We should be expecting balance under this all-time high supply and over this area of demand, which is what held price recently. So it's kind of hard to ignore this potential head and shoulders pattern over here. And if this is going to be a head and shoulders pattern, then the all-time high supply should continue to be problematic. That's how head and shoulders patterns works, where a head and shoulders pattern is just some balance, breakout, break down, rejection from the head, and then roll over. So that's really it. It's a really key spot right now. And I kind of made an error last week. Last week I talked about how I hit the sell in the ES to look for some protection for my longer term holdings. And we should have discussed that, a sell off of this structure would have been very reasonable as well. So I have no one to blame but myself. Just a bit of an error. It makes no sense to be looking for the sell here and then kind of lose track of it over here. So I don't really have the protection that I'm looking for right now. So ideally, the market will just stay strong. But even if we don't happen to get that protection off of this structure, if we do see lower lows from here, we'll have opportunities backtesting this area, backtesting this area. So next week, if the sellers press the issue, so we do find acceptance under 594.37, make space for a lower high, I'm interested in top fishing against this structure again, just like we did over here. Because if these sellers are going to press the issue, then what they need to do is build some supply, break down, build supply, etc., and then continue that trend. So that's what I'm looking out for next week. If you use this conservative trade zone of old, then it's already gotten to your target after coming into the trade zone. So you should have peeled already. Obviously, a very reasonable area to be taking more partials out at the next key test of supply. Your stop can be just under this low, so don't stay using this low. Just walk that stop up. If you stop out, no biggie, no harm, no foul. You get a little bit of partial exits and then stop out that last piece. Pretty much break even. No problem. So that is pretty much it. So these buyers on Friday, it was a very notable failure, just like this was a very notable hold on Thursday to hold the point of control and then move up to this key test. This was a notable failure to not fill the gap and also miss touching the point of control from the downside. So this session, you have to give it up to the sellers. Not only did they move value lower from session to session, they prevented a gap fill and they prevented a back test of 598.16. So the sellers really pressed the issue here. They just didn't really see that much follow through under 594.37. So that remains what we care about heading into next week. That's pretty much it. So moving on to the Qs here. Whoops. Moving on to the Qs. So the Qs are pretty similar, right? Where you have a big old bounce. It's showing you some relative strength because you traded over this guy. So remember, the last structure that the buyers could not hold a backtest over for the SPY is this guy. We're still under its point of control. For QQQ, we're seeing a little bit of relative strength where this is the key structure that the buyers could not hold a backtest over, and we are over its point of control. Very similar in that we broke under the low of this structure, 519.16, without much acceptance. And so again, it's just in better standing than the overall market is. And I want to point out again, just like we have in some recent videos, we still have to be mindful of the situation that's playing out with the XLV and the XLF, because as of right now, there is still daily overhead supply for XLF and for XLV as well. There's a lot of supply for XLV. So this is a situation now where the question becomes, can tech continue to stay strong? If tech can continue to stay strong and hold over prior areas of demand like this guy and this guy, then that'll give these other sectors, healthcare, the other primary sectors, healthcare and financials, the potential to get back over prior areas of supply, get back over supply, or establish an area of demand by doing something like this. So if we can do this, break out, hold a back test of it, then the potential for bullish rotation on the daily time frame will pretty much be back on the table. So right now, though, if let's say the QQQ buyers are not able to hold over 521.74 and they start finding acceptance under 519.16, and XLF also cannot do the same, they cannot find acceptance over local supply, well then now we're just taking terms rejecting from supply on the daily time frame, which again would be bearish rotation. So we have to be mindful of this dynamic in play. And the same thing for XLV. XLV needs to start building areas of demand, right? Building areas of demand and then breaking out and holding over backtest of it so that we can be confident in this bullish rotation coming back into the market. Because again, as of right now, they're all just taking turns creating supply, right? Well, QQQ is flirting with creating supply, but XLV and XLF are just again creating areas of supply. So what the buyers need to get done now is, if the QQQ buyers can stay up here, maybe move higher, and then once they retrace, if these buyers in XLV and XLF can do this, then again we're back to bullish rotation. But if not, then we do have to be mindful of some more bearish rotation. Okay, so that's pretty much it for the Qs here. Space for a higher low over 509.29. What we really care about next week is acceptance over 521.74. It's the best case scenario for these buyers. And then of course acceptance over 530.61 in order to continue to affirm this breakout. I believe this did come into our conservative trade zone, right? Yeah, so came into our trade zone, very reasonable location to be taking some partials off on a back test of this key structure. I believe we talked about that last week. And so similar situation to the SPY, you can just chop it up, throw your stop under this low. If we stop out and pull any orders for here, if we stop out under this low, no harm, no foul. You book a little bit win and live the trade another day, no biggie. So that is really it for the Qs here. So moving on to the rut. Oh, I'm gonna have to probably edit this out because it looks like my mouth just died. Apologies. All right, so moving on to the rut here. So the rut, very, very weak bounce. So we were looking for the potential of the rut to get back over 227.17. Now, it's not all bad for the buyers just because they didn't get over 227.17. They are still holding over 219.14, which is the point of control of this local demand zone. So as long as they're holding over this local demand zone, then it is being affirmed as demand, but we don't have confidence in it being affirmed, or the most confidence in it being affirmed as demand without acceptance back over 227.17. So heading into next week, our two key levels are going to remain the same, 219.14 in order to see if we can continue to affirm this as demand, and then also 227.17, because if over 227.17, then these buyers should be trying to get back up here, which is now the new all-time high supply. The prior all-time high supply that we were watching over here, technically we traded through it, so the new all-time high supply is over here. We should care about it first, or rather we should prioritize it over the prior all-time high supply. And so if acceptance over 227.17, these buyers should be trying to make their way back up to the value area low of the structure, 238.50, and then the point of control at 240.88, which of course is the primary objective. Getting over 240.88 would affirm this structure as demand, affirming the current all-time high structure as demand. Obviously keeps these buyers positioned well for new highs. All right, so that's pretty much it. If lower lows next week, again, eyes on 219.14. If these guys can find acceptance under 219.14, well then, we're probably back to looking at a back test of this area of demand. Okay, so that's pretty much it. If you're in from this trade zone, you're just sitting tight right now. You're pretty much even. And that's really, I still think it's a very reasonable area for trade. Although, again, I'm not too focused on the small caps anymore now that the Fed has turned a little bit hawkish, expecting fewer rate cuts. Although someone did bring up recently that just because there are fewer cuts doesn't mean that we might not end up at the same rate of cuts, right? Because sure, there are fewer cuts, but maybe they'll cut bigger. You never really know. It is a fair point, which I did not really think about. So anyway, just thought it was worth mentioning. So moving on to the Dow here. So the Dow also entered our conservative trade zone of old, and it's a notable rejection here, right? So that's pretty much the theme, right? Of it was a notable bounce for everybody. The rut, honestly, not very notable bounce, but the general theme is notable bounces, however, also rejections from key levels. So we know that these buyers have to get all the way back up to 444.66 in order to negate this breakdown, which obviously isn't the case right now. They're still very far from that, but they are holding over this very high volume area over here. Give it a second to update here. You can see how there's much more volume traded over here, and the sellers actually failed to touch down on the point of control of this structure here, continuing to affirm it as demand. So again, notable bounce, but also a very notable rejection to not be able to get over what essentially is the next step over here, right? So you can see how this guy is what held the backtest over here, and then these buyers were unable to hold backtest of all of this sideways throughout all of this selling. So these buyers now really want to find acceptance over 432.57 just to pick up where they left off over here, affirming this breakout from November 6th. Okay, so similar situation, came into the trade zone. This guy again, if you recall from weeks prior, we were saying there was an aggressive trade zone up here. I don't like it as much because there's not really that much value established here, and I still prefer this guy. So if you're in from here, again, I would pull those lower bids, chop up that position, throw my stuff under this local low, and then if the sellers press the issue with lower lows next week, just stop out, and then we'll reassess the situation from there. So that's it. Moving on to the dollar here. So the dollar is in really good standing. This is the best the dollar has looked in a very long time. So remember, this is the supply that has been containing price for the dollar ever since 2022. Multiple rejections from that structure. And now, as we were saying, what we were looking for in weeks prior was to look for this trade zone here. But what we'd want to see first is a move to the highs of the range, such that if we were to come back into this new trade zone, then price would be extended on lower time frames, and we're pretty much just looking for responsive trade, right? It's really very similar. The logic of this trade is very similar to the logic of this trade set up way back when, except it's at a different location. So this was responsive trade looking for balance within this structure, knowing that if we do hold the lows of this structure, then they should try to rotate to the highs of this structure. This is the same idea, right? If we hold the lows of this structure here, even if we lower low with no follow through, then we should just be looking for balance within this local structure. And if that's going to be the case, if you do happen to stay within balance here, we can look to position at the lows of this range if the responsive trade does work, and we can leave a runner under this structure. And then let's say that this structure resolves by breaking out, leaving back an area of demand over here. Great, now we have a position with a potential runner. So I still like this. Trade zone for the dollar. And again, this is a very, very notable development. The dollar has not been this strong since 2022. We've not had this much space over this point of control, 106.335, since, well, really back here in 2022. Like even all of this, it didn't really make that much gains over the point of control, whereas over here, we're quite a few points off of the point of control. Okay, so I like this very much for potential trade zone on any retracement. It's essentially a play for a weekly higher low, potential weekly higher low. All right, so that is pretty much it for the dollar. Moving on to NVDA. So NVDA also bounced into our trade zone, just dipped into it a little bit, and another rejection from the target of this more aggressive trade zone, which is just based off this prior all-time high, because all of this price action is trying to affirm this breakout over here. And obviously right now, inability for these buyers to do so with multiple rejections from that 140.76 level. All right, so again, bigger picture, we could be looking at balance, like a very large balance throughout all of this, just like we balanced for a long time. Even that one's not even that long. This one is kind of what I would not be surprised if this turns into something like this. Just a very lengthy period of balance. This was like half a year or so. It's like half a year or so. Would not be surprised if that's what we're looking at over here. We're already kind of in that half year mark, but you know, these things can go longer than we expect. So I would not be surprised if the sellers were to take some time to rotate all the way back down to these lows. Again, the Fang Mentee, if they are to take turns doing that, that's really not that big of a deal. So again, if we just pop on over to all the tech names, hang on a second here. Oh, actually, I can just go here. If we were to just pop on over to all these tech names, you can see that, all right, so if they take turns going sideways, trading sideways in a holding pattern, and then breaking out of that holding pattern and holding back tests of the holding pattern, then that's just fine. So we'll watch things like Microsoft, which has been in a holding pattern for some time. If they can start breaking off to new highs and then holding over back tests of these large areas of demand, then that's going to increase the probability that NVDA is just trying to hold in its own pattern and then eventually try for a breakout as well. So Amazon's new highs, Meta is looking to backtest a prior area of breakout. Google looking to backtest a prior area of breakout. Tesla looking to backtest a prior area of breakout, etc. So if these Fang Mentee names just continue to take turns, again, consolidating, breaking to new highs, that's a healthy rotation that we want to see in the tech sector to keep the tech sector strong, and then increase the potential for them to continue to lead the way for buyers as finance and healthcare kind of take breathers here. Okay. So that's pretty much it. I still stand by this trade zone. Again, you want to have extension before using it and then peel out no later than 140.76. So at this point, same thing as those other setups that worked out okay. You just want to take your partial profits, throw a stop on the local low, and then reset. If you stop out the rest, book a small win, no problem. I don't think anybody would complain about that. Moving on to Bitcoin here. So Bitcoin is just clinging on to this local area of demand. So the best case scenario for momentum style traders on the daily time frame is for these buyers to just continue holding over this area of demand over here, which has been the case. Sellers so far just multiple pop and drops at under 93495, which is the actual high of the range. The point of control of the structure at 89541.25 actually hasn't even been tested. So this structure's let's call it this structure's status as an area of demand hasn't really been challenged because they haven't even touched the point of control. Now, that being said, if we are going to be in very large holding patterns for certain assets, then I would not be surprised if the Bitcoin markets would eventually come at backtest the highs of this very, very large area of breakout. Again, it's very, very common. Even this is just a backtest of this large area of breakout over here. For example, these lows are just backtesting this guy after breaking back into it. This low is just a backtest of this fella over here. You can just look in the BLX chart, right? The BLX chart, which will have even more of these backtests, right? So, for example, this is going back a long time. So here is a area of sideways, these are weekly charts, multiple backtests over here, area of sideways breakout, backtest over here, area of sideways breakout, and these backtests actually never come back down to it. Failed to come back down to it, just a backtest of these highs over here, etc. So I would not be surprised. Here's just a backtest of these much larger areas sideways over here, and you could argue that even all of this sideways structure was really just backtesting this guy, backtesting this guy. So again, would not be surprised if that were to happen. Doesn't have to happen, but I would not be surprised by any means if that were to happen. And I'm personally more interested in looking for buys over here. I would just look to trim out some of the longer term, or rather add to some longer term holdings on any retracement back into this area. So again, shorter term operators, you can be looking for plays like this. You really just don't want to see acceptance under 89541.25, which would affirm this structure as supply. Affirming this structure as supply would increase the potential that we come back down and back test this area, 75,000 or so. The prior all-time high is at 73,835.3.57. Okay, so that's pretty much it for Bitcoin. Moving on to Ethereum. it's really still just balancing within this large structure over here. So this guy continues to be problematic for buyers. This fellow over here was the launch or the diving board for this huge amount of selling. Big old run up back into the structure again, rejection, run into the structure again, rejection, run into the structure, rejection. And so after a higher high over this guy, essentially that's a look above and fail. The sellers, they should be trying to make their way back down and test the lows of this range. This is where I'm most interested in looking for some Ethereum. I would like to see a lower low here, although it is notable that the sellers have thus far failed to backtest the point of control 3083.33. That's the POC of this guy over here. I'm viewing this as the gateway into all of this, right? So just like you had a rejection from the low of the structure over here at 2814.12, affirming this structure of significance, trading back over it and then affirming it as demand was obviously very notable. They made their way all the way to the highs of this local range, but no acceptance over the POC 4017.56 of this guy means that we should still expect price action like this. So if we were to rotate down and look to backtest this 2800 level, this is where I would be most interested in looking for some Ethereum buys. Okay, so that's pretty much it for Ethereum. And then finally for CCJ, okay, so a lot of head and shoulders patterns are shaking out right now. Now, the caveat to this is that this is still a blue sky bull, right? So they just made new all-time highs, so it is a rather aggressive sell. And the sellers are failing notably right now to come back down to the point of control of this prior all-time high structure over here. This guy's sitting at the prior all-time high for years. So far, failing to come down and touch the point of control. The last time they touched the point of control, it was a very notable hold. So if these sellers continue to make these lower lows here and fail to get back under 5022, that's a pretty notable failure, but still, aggressive sellers, it's reasonable still to be looking to top fish against this all-time high supply, looking for the potential of a head and shoulders pattern, very similar to what SPY is potentially doing right now, right? So SPY, left shoulder, create supply to make the head, drill down lower, retest the supply that's, again, making for the head, and then a rejection. So it's an aggressive sell, but I still think this is pretty reasonable. This is essentially the sell that we should have been looking for on the SPY if we wanted to stay protected for any kind of like longer term position, but essentially hedging the longer term position. So that is that's really it. Not much to talk about. Besides that, just a shortened holiday week. Got some decent base hits in from day trades or whatever. And if you're interested in day trading along with us, we're trading along with the community in general. Give us a shot. Links in the description below if you're interested in the in a swing report. That's just 2 novel trade ideas sent to you every single week. The logic is fleshed out. Any trade that I actually take, I'll do live play-by-play coverage for it as well. I do not take every single trade idea because 2 every week adds up very quickly. But the ideas that I do take are typically very straightforward, very easy to manage, easy to follow along with. Not that we are trying to get you to take the exact same trade, but it's easy to follow along with the logic of the trade and replicate that for yourself in the future so that you don't really need to depend on. That's our goal, right? We don't want you to have to depend on a service. Although of course we do have many operators who use our information and don't trying to trade exactly like us. They have their own operations, so they adjust the taste, as I like to say. So anyway, that is pretty much it. If you wouldn't mind helping us out with a like and subscribe, that would be really great. Costs you nothing, helps us out a bunch. And that is pretty much it. So I hope you enjoy the rest of your weekend. Hope you enjoy the rest of your year. Hope you had a nice holiday. And I hope to see y'all next time. Farewell.